Hello, my name is David Buckland and welcome to the new financial year. I want to use today's video insight to review the year to June 16, a very tough period for most investors. In summary, the Australian market, including dividends, was up nearly 1%, while the world share market in Australian dollars, including dividends, was down nearly 1%. Weighing on world markets was the Chinese market, down 31%, the Japanese market down 23%, while the German and French markets were both down around 12%. The big story over the year was a continued decline in government bond yields to record lows. Countries like Japan, Germany, Switzerland and Holland are now offering negative interest rates for 10-year money. And that means lenders don't get any money at all. In fact, they pay to lend money to those sovereign governments. Most commodities, with the exception of gold, had a tough year, although oil and iron ore bounced very strongly in recent months to $50 a barrel and $50 a tonne respectively. On the agricultural front, we saw wheat down 27% to $4.50 a bushel, hit by a very favourable Northern Hemisphere crop, while beef is hitting multi-year highs on the back of tight inventory and recent widespread rain. Gold, up 13% to $13 an ounce, has continued its momentum, and today it's closer to $1,370 an ounce. On the currency front, the weakness in the pound sterling to three-decade lows was related to the Brexit vote, while the yen recorded a very strong rally, and this is hurting the Japanese exporters. The Australian dollar in US dollar terms declined by a small amount from 77 to 75. Pleasingly, all Montgomery's products did very well over the year. The private fund and the Montgomery fund were up 13.5% and 11.2% respectively, which was very pleasing. On the global side, the Montgomery Global Fund and Montica were up about 1% and 5.25% over the year respectively. Not great in absolute terms, but pretty solid in relative terms. On the economic front, I am looking for a relatively tough trend to remain intact. However, it's interesting to see US share market hitting all-time highs and the British share market hitting a 10-month high. Record lows in cash rates will prevail, and in some countries such as the UK and Australia, cash rates will fall further. While this should be supportive for markets, there is surely a point where very low interest rates are hurting retirees, people who are considering to retire, and fiscally conservatives. I believe these very, very low interest rates are not helping economies at all. Please continue to follow us on Facebook and Twitter, and thank you for your attention.